Hi everyone, hope you're all doing well, and today we are going to do my US stock market portfolio review, and this is a series that I've run on the channel for probably 3 or 4 years now, where you guys get to see my stock market portfolio on the US side and how things are going. Now, I'll start off by saying that if you do want to join the Patreon and you also get buy and sell alerts when I'm buying stocks, the link is in the description. We also have a Discord on there, we also have portfolio reviews on there, private live streams on there, and if you do want to start buying some stocks, there's a link to a free trade account in the description as well. But I am going to start off by saying this stock portfolio has turned into a bit of a mess this last month, and you'll see the reason why if you follow the series, but smash the like button as well if you could. But yeah, it has turned into an absolute mess, because in case you've been living under a rock, basically what happened between the month of February to March is that we had a big massive correction, and the Nasdaq in particular dived 10%. So that kind of led to some stocks coming on sale and buying a lot of stocks. But because of me buying stocks, some positions are kind of a little bit everywhere at the moment, and they need altering a little bit. So I'll kind of talk you through exactly the alterations that I am going to be making in the portfolio going forward. But first of all, all the buys I've made were in my trading 2 and 2 accounts, so I'll show you that in a second. But I'll start off with my Giro account to start off with. Now, I've kind of left this account. I've actually not bought any new stocks in my Giro account this year. In fact, the last time I actually bought a stock in this account, I believe, was in March 2020. So I've not really been using my Giro account that much, but this is currently what is in there. So in here, I'll try to spend a minute on every stock where possible. We've got Alibaba, which is up 24%. We've got Carnival, which is down 24%. Carnival, for you guys that don't know, is a stock I started buying 2 years ago in 2018. So, nearly 3 years, I guess now. But yeah, I kind of bought that for, okay, it's on a bit of a sale, and who would know that, we would have 2020, a CV outbreak, and the stock would just absolutely die. Funny enough, I was actually down on that position. I believe in peak CV, I think I was down like 80% on that position. So now we're down 24%. The recovery is nearly there. And generally when we do get back to, when I get flat back on that one, which I think my average is like $33, when I do get flat on that one, I will just sell out, and move on to something else. It just kind of, it's always hard to predict something like the CV situation happen. You can't be too harsh, but I generally won't sell. One of my biggest grudges is selling the stock out of a loss. I just generally won't do it. So I will wait until I get flat, and I will take my profit on that one. And the next one's Dropbox, and I'm going to say this portfolio, these numbers were taken from Thursday, so any changes that happen Friday won't be reflected in here. So for example, like Dropbox, I think they had an amazing Friday, so that's not in that price right there. But so it's up a little bit more than that now. I think it went up like 6%. But yeah, when I took this recording, I was up 26% on Dropbox, which is nice and healthy. One of the longer ones in the portfolio. Hasn't really done much, but it has just got to new 52-week highs, so it'll be interesting to see where it goes from there. I'd probably sell that one out at about $40. I always got to say as well with these portfolio reviews is like, you never actually the thing is, this is always the active account, so you kind of have like new blood always coming in. Like in like the history of investing, unless you've been following my channel for like the last kind of 3, 4, 5 years, then you won't see like the gains that are always sold. So I guess there's always that to take into consideration, like the money that's being made. But yeah, just thought I'd mention that because people always forget, like they forget the success that you've had and like some of the stocks that you've sold on positives as well. So yeah, but anyway, back on topic. Facebook, currently up 52% on this one. Yeah, I'd hope this one does come to a 100% return very soon. So yeah, I think those were the shares that I actually started buying when the Cambridge Analytica happened. So I can't even remember what year that was. I think that was 2018, 2019. And then we've got Gang, which is currently up 31% on that one. I know some of you guys actually have so many better averages than me on that one. I know some of you guys are up like plus 50% on that one at least. Same with you, yeah. I know some of you guys have a bit more better averages than me on this one. Kind of crazy, this one's only up 13% now, but should be up a bit more than that, but we'll see what happens. JD.com, which is currently up 308%, just such a strong company that's doing really well in the portfolio. I generally can't see myself ever selling them shares in JD.com. I would hope for it to be my first 1000% return if that ever happens, but it's doing quite well. Microsoft, this is frustrating. Microsoft has just dropped below 100% club member. I used to have free in here, but it's just dropped down below 100% now. But yeah, I've had that one in the portfolio for a good 3 or 4 years now. So yeah, I'm just still happy to hold that one at the moment. I have a good average. I think my average on that one is like $100 or something. So yeah, it's going pretty well. Pinterest up 190% on that one. Same again, I don't think I can sell that one anytime soon. I think there will be in a little bit of a shock because I think they've had CV help them. So I expect this one to have a bit of a period now over the next coming few months where it does stagnate a little bit, but I'm still happy to hold them shares. I can't even remember what my average is exactly on them. It's somewhere in like the $20 range, so I don't ever see Pinterest going back down to there, whatever happens. Visa, which is up 31%, and Walt Disney, which is up 26%. These Walt Disney shares are shares that I actually started buying in back end of 2019, 2020, when I knew the Disney Plus was coming. I was like, oh, is it 52-week highs? It's a rich valuation, and I bought it. And I was always like, my one rule is never to buy stocks at 52-week highs because it's just so easy to get stung. And then we get the CV, and you'll see that I did buy some more shares, but it's in the trading 212 account. But yeah, that was a bit of a lesson. But they have recovered, funny enough. I never expected Walt Disney, a kind of tourism stock, to be higher than where it was pre-CV. So credit to Walt Disney, because that one was down a bit through the CV times. But now we'll go to the trading 212 portfolio, and yeah, you can see there's a few. You can tell this is where I've been buying a lot more stocks at the moment. And as I said earlier, you can tell if you track this series, you can tell it has got a little bit of a mess at the moment. One of the things that makes me a bit nervous about this portfolio is that I currently hold too many stocks. It's not terrible. It's not terrible at all. I think always when you do it in a pie chart kind of thing, it does look like there's a lot more than what there actually is. But there is probably a few more stocks that I'm considering like sorting out here. So but I couldn't resist it. You give me a 10% dip on Nasdaq, I'm going to go out and buy a few things. But yeah, I'll kind of talk you through everything, what's going on with the portfolio, where I'm at with everything in here. So we've got, we'll start up at the top. Some shares in Alibaba, which is up 6%. Now, obviously, I've got Alibaba shares in the other portfolio at a much better average. So I'm probably, at some point, I probably will sell them Alibaba shares and just keep holding the ones in my other portfolio. Those were the ones that I bought on Christmas Eve. But I say that, but Alibaba at the prices it's at right now is actually kind of tempting. So not sure on that one. Alibaba's one that I'm kind of still planning on, really. We've got Amazon. So yeah, I think Amazon at the moment has got to really attractive prices. And I'm willing to hold this one for quite a while. I think at the moment Amazon is at good prices. We've got Beyond Meats, which is up 6%. We've got Boeing, which is up 78%. Once again, I think this had a really good day on Friday. I think that's up like 90% right now. We've got a new position here in Corsair, which is up 5%. I am considering making this Corsair position probably the double of the size where it is at right now. We've got DraftKings here, which is now a big chunky position, and I plan to hold that for a very long time. We've got EHang, which is currently flat, but I'm really happy because the short report came out and I was able to get my average down from $60, $70 down to about $45, which is amazing. The only problem is that I've averaged down and the position has got a bit big for a spec position, so I am going to probably trim some of this over the coming few months. We've got Facebook, which is up 35%. Those are the shares that I bought in the CV. We've got Callaway, which is up 17%. Would like to make that a little bit bigger. We've got a little bit of shares in Gang, but obviously I've got Gang in the other portfolio. So I'm not even, I would say I'm never even sure why that is there. That's probably one that I might just sell out just to make it look a little bit cleaner, because I've got shares in the other portfolio. Obviously that's a better average, but I'm probably going to just keep the ones in the other shares. So that might go in the coming few months. And then we've got GNOG here, which is up 23%. This for me was like the best valuation in the dip that we had like a week ago, 2 weeks ago. So I did buy quite a bit of GNOG, currently up 23%, probably because of the amount of DraftKings and Gang that I've got. This will probably be gone by the end of the year, somewhere between a 50% to 100% return. I'd be quite happy to probably take my profit on that one, and that will reduce the amount of stocks down in the portfolio. In mode, which we are currently up 116% on that one, fantastic, still a lot of upside on that one. Microsoft, which is up currently 31%, so that's some that I bought in the CV dip. We've got Pinterest, which is up 258% on this one. Those were a couple of shares I bought up in the CV dip as well. Obviously I've got some in the other portfolio, but this is a better average as well. We've got Planet 13, which is pretty much flat. Is making a bit of a big position for a spec stock, but I don't think there's that much risk there with that one. We've got Shopify, which is my new biggest position in this portfolio, which is down 2%. I could buy a little bit more of this. We've got Skills, which is up 51%. We've got Square, which is up 11%. With this one, with Square, I'm quite happy. That's about perfect where I want it to be. We've got Tattoo Chef, which is up 15%. And then the shares that I bought in Tesla, which is up 11%. We've got Turtle Beach, which is up 41%, and some more shares in Visa, which is up 16%. And then we've got the top Walt Disney. Those are the shares that I bought in the CV situation, and yeah, they're up 73%, which is really good. So yeah, overall, this portfolio has now got probably a couple too many stocks. I would like to trim this portfolio by probably 3 stocks in the coming few months, just because I think there's a bit too many. But like I say, I can justify all of them for being really good companies. Probably, like I say, I'm considering Alibaba, but even I think the prices are still pretty good. Amazon I love, Boeing Meats I love, Boeing I love, Corsair will probably get bigger, DraftKings same again, eHang probably shrink a little bit, Facebook I'll keep, Callaway I'll keep, Gang's probably one that could go, just because it doesn't make that much of a big position up, and I've got a lot of shares in the other account. I just have a really good average. I generally don't know why I ended up buying it in this portfolio. And then we've got GNOG. Like I say, I think that position might be gone by the end of the year. Then we've got, I'll probably do a full video actually on GNOG soon. I know a few guys want that one. InMode I'll keep. Microsoft, thinking about that one. Pinterest, if I didn't do YouTube, I would have sold them shares probably in Pinterest. But there's some sort of point where I have to keep a couple of stocks that have like over like 100% return, because unfortunately, like, there's got to be a point of view where people are like, why should I listen to you? And you're like, there you go, there's a, because the thing is like new people will never see like the success you've had of the, you know, I've probably sold, I don't know, over 100% returns in like the last 12 months, but no one will ever see that. So it's always good to keep that there for the YouTube side of it, which is, I know, a bit stupid, but yeah, we'll see what happens with that one. Planet 13 definitely keep, Shopify will keep. Skills, probably keep. I do think that's a bit of a rich valuation again now though. Square, same again, Tattoo Chef keep, Tesla keep. Turtle Beach is probably one that will be gone by 12 months time, so that will probably go, just because they rely so much on the gaming cycle. Visa will keep, Walt Disney will keep, so that probably gives you a good idea where I'm looking at exactly on the portfolio side of it and where I'm probably going to move it. But yeah, that's where I'm at right now. But yeah, I hope you enjoyed it. Like I said, it's definitely looking good at the moment. You know, we've got JD.com. I'm going to say Microsoft, Pinterest. They're 300% returns right there. I would expect Boeing by the end of the year to be up there in 100% returns. So that'd be 4. I would expect. We've got InMode 5. Got Pinterest there again, but I won't count that one because that's the same company. Maybe Tattooed Chef. Yeah, so I mean, overall we should have 600% return club members in this portfolio by the end of the year at least. And then obviously probably some will start getting filtered out. But it's always good because you can see like the companies that have been in this portfolio for like 2 to 5 years, like they show the gains, which is like JD, Microsoft, Pinterest, But you also can see like some of the new blood. Like when I buy companies, I don't expect them to do anything for like the first 12 months, and then after that I expect them to start kicking on. But you can see here like that exact thing happening. So like, you know, your Walt Disney starting to kick on after being in there kind of coming up to 12 months. But you can see like the new companies like Corsair, the new blood that's in there. You can see the new blood like Callaway, you know, there and stuff. So yeah, it's a good mix. You can see the companies that are still in there, that the long-term holds starting to kick on, but you also can see some of the new blood that started coming in, and how that's building up. So yeah, for you guys that track my portfolio every month, I hope that little update was useful for you. Like I say, it's definitely the most messiest portfolio that I've had for a very long time, but I think the good thing is that you'll probably see then how I kind of, over the next kind of like 6-9 months, you probably see me sort of kind of clean this portfolio up a little bit now. But yeah, anyway, I hope you enjoyed it anyway. If you could smash the like button if you made it all the way to the end. If you knew and you found it useful, subscribe as well. And thanks for watching, and I'll see you in the next video.